All right, we are 10 seconds out, guys. Let's see what we get for final GDP quarter over quarter, as well as unemployment claims here in the United States. Let's see what happens. And we're going to just keep an eye on the market as this happens. All right, and S&P, not too much volatility here. DXY, 15-minute chart pulled up. A little bit of movement. Let's see. Oh, there goes DXY making a little bit of a push. Wow. Gold coming down hard. That would allude to me that GDP looked good. Let's see if that was correct. Yep, GDP looked good. Remember, guys, GDP, if you're a gold trader, GDP, keep an eye on it because gold pays close attention to global economic health. So GDP coming out stronger than expected right away, we could spot that, right? That's the cool thing with fundamentals. By the time I saw this candle, I knew GDP looked good because that's what would push gold down. Okay, you have to be able to spot this stuff, and I don't think you get that stuff by purchasing a course. You don't pick that stuff up. You pick it up by years of dedication to this stuff. That's how I learned it, right? So there's no other way that I know how to understand the news, but as it's happening, I knew what the numbers were. It's not rocket science, but it does take a lot of practice. Look at that, guys. Gold trading down and dangerously close to our 1905 level. S&P 500. So again, this would be in line with expectations. I would say unemployment claims came out. Well, they're still pending here. We've got to wait to see what happens here. Forecast was 264K. Same as previous. Let's see how things. Let's see. I'm not sure where are these numbers coming in? Are they what do we just get here? Did we get some sort of update or something? Okay. Weird. The number just disappeared. Did anyone get these numbers? Oh, there it is. It popped up. Better than expected. Oh, okay. We would expect a little pressure on the S&P, right? Because again, got to be able to think quick on that. Reason is pretty simple if you think about the Fed's focus. Fed needs jobs to stay cool because jobs heating up causes inflation. Inflation is the Fed's worst nightmare right now. They're trying to get inflation down. They may need to rate hike if inflation gets too hot. That pushes the stock market down, pushes the dollar up, pushes gold up. I'm sorry, down. I messed up. I was almost good. I almost had it all. I almost gave the full coverage. I'm sorry if I went too fast on that. There is this barrier. There's this learning curve to fundamentals, and I am very aware of it because I know how hard it was to learn all that stuff. I am not an economics major. I went to school for computer science. I'm a software engineer by trade. I've learned economic stuff in regards to trading over the years simply just by reading articles, watching videos, digging into it, watching countless economics videos. I mean, I don't know how else you learn it, honestly. You have to understand the full story. It's not incredibly complicated, but the economics majors out there will attest. There's certainly a learning curve to the stuff. It's a lot. What's up?
Dude, what happened to you?
Haven't you heard? It's the summer half-off discount sale.
Oh, that's right, I forgot.
Right now only, get half off any of our VIP Discord memberships. These memberships include access to our signals where you can get entries and exits from Frank and I and full breakdown and analysis with each trade. You can learn our strategies in detail. You can learn how to get funded with our training material to help traders looking for funding. And you can also join the chat room community. We have several membership opportunities, so click the link and check them out for yourself. And remember, you get half off if you either message us or use the discount code you see on the screen now. S&P made a move this morning. You've got an S&P trade on. Do you have any other trades, and how are things going?
So I was in GBP CAD. I trailed that to break even because I had been floating a loss on that for some time. It finally came back up, and I was, just looking to adjust and see if maybe I can get in at a better entry or whatnot. But yeah, closed out at break even, so nothing exciting there other than the S&P, which I'm still, I believe I'm still in. Yes, positive unemployment claims caused that spike. So just holding on to S&P for now.
So you've got S&P 500, and your last update on a stop loss is 43.58, 43.58. So you're trailing this one, I would say, a little bit looser than me. I moved stuff up this morning just behind this level. Were you thinking about trailing it? So this is, so I'm going to put in for Nick. So this is Frank's stop loss. We had pretty similar entries, Frank. Are you looking to trail that stop tighter today, or what are you thinking?
I'm waiting for this move to kind of fizzle out. So maybe in the next, I don't know, probably till like 10 or so when the market, will open, cause a lot of volatility. And so will this news. So just kind of waiting for the move to happen. And I think I'm willing to hold on to it if it dips low. I'm just expecting kind of big swings up until then.
Okay. Yeah, no, that's fair. And tomorrow we do have core PCE, which should move the markets probably, Frank, core PCE is probably one of the most important inflation measurements that we get, purely because it focuses very heavily on the consumer. And maybe more importantly, the Federal Reserve has been very clear that it is their preferred way of measuring inflation. So of course we get the CPI number, the headline inflation that sort of everybody looks at, but the Federal Reserve, who does have a strong grip over what the market does, pays close attention to, core PCE. So prior to tomorrow, do you have any thoughts on the S&P? Again, keeping your stop relatively loose here by keeping it back below yesterday's kind of stronghold area. What would be your plan going into a big news event like tomorrow?
Well, I'd probably hope for lower numbers coming out. So we already expect the Fed to do what they're going to do. They talked about more tightening at some point by the end of the year. The market knows what's coming. 5.6 is, the consensus of where we'll probably peak. So any kind of good news right now is just good news for the markets, for the stock markets overall. And yeah, I see you pulled up gold there.
Yeah,
Still looking
thing is
at
dying, man.
a decent setup on gold, but haven't really entered in a while. I keep seeing it'll hit support and then just keep dipping lower and breaking demand zones.
So Frank, quick coverage on today's numbers. I gotta say, this is probably a knockout win for gold bears in terms of economic numbers. You had back-to-back two fundamental drivers for gold, and really kind of something for us to focus on, Frank. Of course, on the side of EDGEFINDER development. GDP matters so much to gold. It seems to matter a lot less to indices, and unemployment claims are kind of somewhere in the middle. But a knockout win, I would say, for the gold bears today, because GDP again was strong, and unemployment claims, we'll put claims, were down. Both of these show economic strength. And again, economic strength tends to rule out the fear buyers when it comes to gold. Would you agree? Does that make sense? I guess what I'm saying.
Yeah, your point on GDP, I wasn't really that wasn't something that came to mind, but that's cool to learn. I didn't know GDP was, as effective as or more effective than other fundamental things. But
Yeah.
one thing to point out though is that COT also, if we want to look at that at all, probably not now, but they're also buying into this move down. So
Yeah.
maybe by Friday at 3:30 we'll see what they've done. But last week shows some betting on more upside. And
Yeah, I would say,
yeah, that the 1880s mark looks kind of like a good spot if you were to take another attempt at a gold long.
yeah, I would say a very interesting week for gold. You see gold moving down. Big money, however, has been building a position on gold. And so, I personally don't love the idea of being super short on gold purely due to, again, institutional money being so interested in it on the long side. But it's a fascinating, release today. Again, weak GDP. Strong GDP is going to weaken the gold market due to, people who are like, oh my gosh, the economy looks terrible, let me go into gold. that story is not on the table. We saw strong economic output out of the US, and that is making people who are like looking at gold, they're like, yeah, remove this hedge, get rid of this hedge. A lot of, institutional money might be thinking that way perhaps this week. But again, we will get the COT data.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.